We have discussed how to calculate interest on drawings when amounts are withdrawn monthly. Now let us look at the rest of the scenarios. Now we will discuss how to calculate the interest on drawings when fixed amounts are withdrawn quarterly, when varying amounts are withdrawn at varying intervals, as well as when the partners have missed recording the date of withdrawal, thereby dates not at all being specified. Let us discuss how to calculate the interest on drawings when fixed amount is withdrawn at the beginning of every quarter. As we have discussed before, when fixed amounts are withdrawn at the regular intervals, rather than calculating for each and every withdrawal, we can aggregate and calculate on the basis of average period. Similarly, we have to first calculate the average period here. Average period is the average of all the periods for which an amount stays outstanding from the firm. That is the average of the longest period and the shortest period. The formula for average period is the longest period for which the amount of drawings is outstanding added by the shortest period for which the amount of drawings is outstanding, and the total is divided by 2. If we assume the accounting period to begin with April 1st and end with March 31st, then the first withdrawal of the year, as the withdrawal is done at the beginning of each quarter, happens on April 1st. So the longest period for which an amount is outstanding during the year is April 1st to March 31st, which is 12 months or 4 quarters. The last withdrawal of the year, which happens at the beginning of each quarter, is on Jan 1st. So the shortest period outstanding is January 1st to March 31st, which is 3 months or 1 quarter. So while calculating the average, we get either it is 15 by 2, or if you calculate on the basis of months, and if you calculate on the basis of quarter, it is 5 by 2. That is the average period. Now that we have established the average period, which is either 15 by 2 when we are calculating on the basis of months, or 5 by 2 when we are calculating on the basis of quarters, wherein fixed amounts have been withdrawn at the beginning of each quarter. Now let us look at the formula of interest on drawings. For calculating the interest on drawings, first we see what is the total amount of drawings made for all the 4 quarters put together. Then such total amount is multiplied by the rate of interest, and which is then multiplied by the average period, as we have already calculated. Then the whole is divided by 12 if we take the average period in months, as we have seen, which is 15 by 2, or it is divided by 4 if we take the average period in terms of quarters, as we have seen to be 5 by 2. Now let us take an example here. Mr. A is a partner in the firm and he withdraws rupees 30,000 at the beginning of every quarter, and the rate of interest is 5% per annum on drawings. Now let us calculate his interest on drawing in 2 ways. One is on the basis of months and another is on the basis of quarters. But before getting into that calculation, firstly let us see what is the total amount that he has withdrawn for all the 4 quarters put together, which is 30,000 into 4, that is 1,20,000. Now if we are calculating on the basis of months, then the formula is the total amount withdrawn into the rate of interest into the average period, which in terms of months is 15 by 2 into 1 by 12. That is, the whole thing is divided by 12 since it is on the basis of months. And then we get it as rupees 3,750. 50. Or if we want to calculate it on the basis of quarters, then how will the formula be? It will be 1,20,000 into the rate of interest, which is 5%, into the average period which we had seen on the basis of quarters, which is 5 by 2. That was 4 quarters plus 1 quarter divided by 2. And the whole thing is divided by 4 since we are calculating on the basis of quarters. So that will be a total of rupees 3,750. So you can see that the difference between these two formulae, whether you are calculating on the basis of months or quarters, is one is the average period. Here we had seen it was 12 months plus 3 months divided by 2, and here it was 4 quarters plus 1 quarter divided by 2. And secondly, here since it is on the basis of months, we divide the whole thing by 12, and here since it is on the basis of quarters, we divide the whole thing by 4. But however, by both the formulae, the final amount of interest on drawings is the same. So now that we saw how to calculate interest on drawings for fixed amounts withdrawn at the beginning of every quarter, now let us see how to calculate the same when amounts are withdrawn at the end of every quarter. Coming to the calculation of interest on drawings when fixed amounts are withdrawn at the end of every quarter, as we saw in the previous formula, let us first discuss and establish what will be the average period in terms of months as well as in terms of quarters in situations where fixed amounts are withdrawn at the end of every quarter. Average period here again is the average of all the periods for which an amount stays outstanding from the firm. That is the average of the longest period and the shortest period. The formula for average period is the longest period for which the amount of drawings is outstanding added by the shortest period for which the amount of drawings is outstanding, and the total is divided by 2. If we assume the accounting period to begin with April 1st and end with March 31st, then, in a case where withdrawals are done at the end of every quarter, the first withdrawal for the year happens on June 30th. So, the longest period outstanding is June 30th to March 31st, which is 9 months or 3 quarters. The last withdrawal for the year happens on March 31st itself. So, the shortest period outstanding is 0 months, or in other words 0 quarters. So, the average period is either 9 by 2 when it is calculated on the basis of months, or 3 by 2 when it is calculated on the basis of quarters. Now that we have established the average period for cases where amounts are withdrawn at the end of every quarter, which is either 9 by 2 when calculated on the basis of months or 3 by 2 when calculated on the basis of quarters, now let us calculate the interest on drawings. For calculating the interest on drawings, first we see what is the total amount withdrawn for all the 4 quarters put together. Then such total amount is multiplied by the rate of interest and further multiplied by the average period as we have already calculated, and is divided by 12 if we take the average period in months as we have seen to be 9 by 2, or it is divided by 4 if we take the average period in terms of quarters as we have seen to be 3 by 2. Let us take an example here. Mr. A is a partner in the firm and he withdraws rupees 30,000 at the end of each quarter, and the rate of interest on drawings is 5% per annum. Now we have to calculate his interest on drawings, which we will calculate in two ways. One is on the basis of months and another is on the basis of quarters. However, before delving into that, let us see what is the total amount that he has withdrawn for all the 4 quarters put together, which will be 30,000 into 4, which is 1,20,000. Now, calculating this interest on drawings on this amount on the basis of months, we have the formula 1 lakh 20, that is the total amount withdrawn, into the rate of interest into average period on the basis of months, which is 9 by 2, as we have worked it out, which is 9 months plus 0 months divided by 2, and the whole thing is divided by 12, since we are calculating on the basis of months. So the interest on drawings here is rupees 2250. Next, let us calculate this on the basis of quarters. So the formula will be 1,20,000, which is the total amount withdrawn, into the rate of interest, which is 5%, into the average period, which on the basis of quarters is 3 by 2, which we worked out as 3 quarters plus 0 quarters divided by 2. And the whole thing is divided by 4, since we are calculating on the basis of quarters. So the total amount of interest on drawings will be rupees 2250, and as we can see under both the formulae, the same amount is arrived, if it is on the basis of months or if it is on the basis of quarter. So we have seen how easily we can calculate the interest on drawings when fixed amounts are withdrawn at regular intervals. We have seen it for monthly basis and quarterly basis, as well as understood the logic behind such calculations. Now, let us see how to calculate interest on drawings wherein amounts and dates are random, and also where dates are not at all specified. Coming to the scenario where varying amounts are withdrawn at different intervals, in such a scenario, it is not possible to calculate the interest on drawings on the basis of average period. When varying amounts are withdrawn at varying intervals, first we have to calculate its product. So what is this product? It is nothing but each amount withdrawn multiplied by the number of months for which such amount withdrawn remains outstanding. Since amounts are not fixed and the intervals are also not regular, we take each amount separately and multiply the same by the number of months for which it remains outstanding. Once the product is calculated for all the withdrawals, then all those products should be aggregated or added. Now we come to the actual calculation of interest on drawings. This interest is calculated by taking the sum of all the products as we discussed and multiplying it by the rate of interest and dividing the same by 12, since it is on the basis of outstanding months. So let us take a little example over here. Assuming that the accounting period begins with April and ends at March. And let us say the withdrawals have happened as follows: 5,000 on May 31st, 10,000 on August 1st, and 15,000 on January 31st. And the rate of interest on drawings is 5% per annum. Now, first and foremost, let us check how to calculate the product, then take the sum of those products, and finally we can calculate the interest on drawings. So here, to calculate the product, we should take the amount withdrawn and multiply it by the number of months for which it remains outstanding. So let us start with that calculation first. Here it will be 5,000 into 10, which is 50,000. Then next will be 10,000 into 8 remaining number of months, which is 80,000. Next is 15,000 into 2, which is 30,000. Now the sum of these products is 1,60,000. Now let us calculate the interest on drawings, which is first of all the sum of products, that is 1,60,000 multiplied by the rate of interest, which is 5%, and the total of it all divided by 12. So here we get the amount to be 667 rupees as the interest on drawings. So we saw how to calculate interest on drawings when varying amounts are withdrawn at random intervals. But what happens when we don't know the dates of withdrawal at all? Let's see. When the date of withdrawal is not at all mentioned, then we can assume that the amount was withdrawn evenly throughout the year. And so, for the purpose of calculation of interest on drawings, the period can be taken as 6 months. The formula for calculation of interest on drawings in such cases will be the amount withdrawn multiplied by the rate of interest multiplied by 6 by 2, as we can consider the period to be 6 months where the date is unavailable. So, guys, with this, we have discussed all the scenarios that can arise in the calculation of interest on drawings. This is a very important topic from the point of view of examination. So, you should understand the logic behind each of the calculation so that no matter how twisted or indirect a question is, you will still be able to solve it correctly and get that full marks.